can adjust.
Yeah, adjust. Okay. Tell you what. Right there.
That's it?
Yep.
Okay. We gotta adjust this one now. Okay, we're good. Hey, y'all.
Y'all.
Yo.
FOMC speaks today. Is that on?
Is this mic on? Is this mic on? For those of y'all that don't know, we're talking about home loans, we're talking about real estate, we're talking about interest rates, we're talking about all the things that you want to talk about.
Whether or not it's a good time to buy. We're talking about scam accounts. We're getting a lot of scam accounts.
Ooh.
And I'm finding out other loan officers are getting scam accounts too. Strange. But that stuff is happening. Pull up the rates.
Is the loan officer the new trusted authority in the world, or the new social media socialites?
I don't know. Well, there's a few that I follow. I like to watch them. I mean, I put it out pretty big that I'm a fan of the loan officers that are out there pushing it, because this is a tough business. And right now, even tougher. Like, FOMC is speaking right now. Today, right now, at 11:30. Right now. Exactly. Right now.
What does FMOC stand for?
FOMC is Federal Open Markets Committee.
Okay. And what are they talking about?
So, Federal Open Markets Committee, they are the ones that set the interest rates for the banks. Not the mortgage rates, but the interest rates for the banks. So, currently, there are 12 members of the FOMC.
Okay.
Very strange, but for some reason, every member is elected for 14 years. 14 years. I don't understand why.
It's a career.
Yeah, 14 years. They're elected for 14 years.
Paid
Wow.
positions?
Yes. 14 years. They're elected for 14 years, but they're staggered. So you never get like half of them replaced or half of them replaced. They're staggered, and they get elected for 14 years. Crazy. Anyway, the chairman of the Federal Reserve is appointed by the president and then ratified by the Senate, I think. Mm-hmm. So, chairman of the Federal Reserve is Jerome Powell, but he doesn't run it. He's the one who is appointed. And there's all these people, and they're the big, like the chairman of the Bank of New York, and all these very, very powerful people that look at our economy and they say, hey, what are we doing? How are things going? How are things going with the economy? Now, in order to understand all of this stuff and to water it down and make it palatable, that's the hard part, because there's a lot of shit going on there. Well, FOMC, Powell just spoke, and he said, hey, listen, well, he's speaking like right now. I literally cannot see what he's saying because I'm here, which I don't know if that was a programming flaw or not, but it is what it is. I read the notes right before, 30 minutes before they put out the notes.
They know what time we go on.
That's why they did it. They did it so they can take our ratings away. I know why, but then it's not working because we're getting some pretty good people showing up. Nope. So right now, interest rates 15-year on a conventional is 5.625. On an FHA, 5.75. That's what New American Funding is putting out to the world. If you don't believe me, go to the top. There's links. Go to Cool Stuff. You'll see today's rates. New American Funding rates are on the website. Now, what all this mean? What does all this mean? Well, the market was freaking out a little bit yesterday, just a little bit. And they were thinking, oh, God, instead of 3 rate reductions, which they've committed to, they might come down to 1 rate reduction. But I saw the notes. I haven't seen him talk yet. But on the notes, they said, we still anticipate 3 interest rate reductions. Now, there's a theory that says they do not want to favor either political rival, which means the September cut is probably going to be static. It's going to be pause again, which would mean cuts are coming in June. That's what that means. June, July. And then the next FOMC meeting is out, right, after the election, the day after the election. So they can't be accused of trying to favor anybody. Oh, cool, somebody in here is watching. Average que stable este 10-year bond.
What's that mean?
I don't know.
Okay. Well,
it says,
Mika Mortgage laughed at it.
Okay.
User Fannie Mae came out with their prediction.
What does Fannie Mae say? What does Fannie Mae say?
Everyone came out with their prediction.
106K gross, 25% DTI, 20% down payment cash.
All right, Ash, 1922.
106. 106. You're probably in 450 range, somewhere in that range, somewhere 450 range, maybe even a little bit better.
There you go, Ash.
But so I was looking at the 10-year bond right before we came in. 10-year bond yield, 10-year yield started ticking down as soon as the notes came out. Holy smokes, what does that mean? That means interest rates are going to come down just a little bit. The uncertainty is going to be removed from the market because right now there's an uncertainty priced into the market. And once that uncertainty is removed, then we're going to be at about 100 to 150 basis points, which is usually what we stay at above the 10-year yield.
Time for a commercial.
If you need a badass loan, call a badass loan officer. You can reach a badass loan officer by calling Chris and Lee at their cell phones right here, or you can text us. Here's a little hint. Don't do it while we're live because we will not answer. This will disappear in 5, 4, 3, 2, 1. Miska Mortgage, great to see you. We really like when loan officers, realtors, and anybody in the business jumps in. If you know more than me, please teach me.
Okay, I'll teach you later, man. I'll teach you later.
Okay, if you don't, sit down. You might learn something. Actually, I look at I have some loan officers that I follow. I really like these people. And I swear they're watching my lives and they're just basically recontexting everything I say because I go, we just talked about that yesterday. And then all of a sudden this person has a post on it. And I'm laughing at it. I'm like, hey, that's great. Imitation is the most sincere form of flattery. By the way, I love it when somebody's on here. I love it when they challenge me. I love it when they catch me on a guideline. Rarely ever happens. But I love it when we have loan officers in here trying to teach the public on what it is because there's so much bullshit out there. There's so much bullshit. I'll tell you, one of the people I follow says, hey, these down payment assistance programs, they all have catches. And I'm like, I've been saying that for about a year. You're right, they do. They sound great, but it's a bunch of bullshit marketing is what it is. Are they acceptable in some instances? Yes. But are they favorable for everybody? Hell no. Hell no. Go, what do you got?
Mrs. 129. Can you get a mortgage loan with a credit score of 679? And the answer, Miss 129, is 100% without a doubt, probably.
Probably.
Based on guideline, yes.
I saw the guideline go, wait a minute, did you get a foreclosure last year?
So if everything else is perfect, 679 is going to get you a house all day long. As long as everything else is perfect.
Every day. Mrs. 121, just so you'll know, FHA. 29. Dude, sorry, 29. Okay, so FHA starts at 580 FICO score, 580 FICO. Then it goes, Fannie Mae, Freddie Mac goes to 620. Those are the starting. Now, FHA will go all the way down to 500 if you put more than 10% down. VA has no FICO requirement. I actually logged into a loan officer yesterday, and he was talking about hard money loans. And I'm like, okay, cool. Let's see what his situation is for hard money loans. And I said, okay, what's your minimum FICO? And I was doing talk to text. And he goes, I said, what's your minimum FICO score for a hard money loan? And he goes, all right, genius. FICO spelled with an F, not a PHICO. And I was like, oh, okay. I wasn't even being an asshole to you. I was just asking a question. He was talk to text. And then I said, yeah, probably not going to work with you. Anyway, moving right along.
Miss 129, sorry. You got me saying 121. See what you did? Do you recommend paying cash or both cash and finance to increase your credit score? Cash. So paying cash to pay off debt or paying cash to buy the house? What are you saying, Miss 29?
Are we on Facebook? I don't see the Facebook.
Yeah, we're there.
Okay.
Evo transition. How can I get out of PMI in an FHA without a rate and term? You know rate and term. You've already tried this, huh?
So Evo, if you know the term, rate and term, and you're in an FHA within the last 10 years, and you didn't put more than 10% down, you're not getting out of the PMI. You're just not without a refinance. Just not. MI is mandatory in an FHA loan for the life of the loan. You don't get out of it. Yep, the only way is to refinance.
So, Miss 129, buying a house isn't going to increase your credit score. Taking a loan, regardless of the size, as long as you qualify, isn't going to increase your credit score. So, if you put half down and only finance half, it's not going to increase your credit score. To increase your credit score, you're going to have to work on your credit and the things on there. And most of the time, it's credit cards. So if your balances are high on your credit cards, then it's going to bring your score down. So it does this. Okay? So credit high, score low. Credit low, score high. And that's what you're using on your credit card. So don't max them. The rule is keep it under 30%. There's a lot of people out there that are saying you have to maintain a balance. I say you don't, and I speak from experience because personally. So there's a lot of different ways that we can increase it, though, so you're going to have to call us.
So anybody who's watching the Fed meeting, I can't watch it because I'm watching you guys. So if anybody who just came from watching the Fed meeting, what do you got? I just read the notes before we came in here. I read the notes that we're holding at where we're at. We're still in the pause. We still anticipate 3 interest rate reductions. And some people are freaking out, but the market is responding really good. At least 30 minutes ago it was.
Joseph Leone, if I need credit repair, what is the fastest way to get it, and where can I get approved? Okay, so credit repair, what you're going to do is you're going to go, right, if you're on TikTok right now, you're going to go to the link in our bio, you're going to click on the link, and it's going to say repair my credit. You're going to click on that link, and you're going to get started with that program if you absolutely know you need credit repair. And thank you for putting this out, Joseph. So all the millions of you other viewers, if you do need credit repair, go to the link in our bio, click on the link, click on Repair My Credit, and you can get the process started.
We appreciate you on Instagram, TikTok, Facebook, and YouTube. We're here for you. By the way, follow us because it looks like TikTok got banned from Congress, and then it has to go through the Senate now, but I don't think it's going to make it through the Senate.
No.
So,
what are the FHA rates right now for a 650 credit?
for a 650, the only way I'd know for you, user 3742, is if I pulled your credit, because I don't know if you have a 650 credit, calculated your income, checked your DTI, and then quoted you. But until then, what I can tell you is New American Funding is putting out 5.75 on their website. Don't believe me? Go to the link, go to Cool Stuff, and you'll see today's rates. That's how you find out. And the only way any loan officer can't quote you, they cannot quote you a legal quote until they built your file. User 50923 says, good luck. I don't know what that means, but I appreciate that, man. Any sentiment of good luck, I appreciate it.
And I'm going to go back to user 3742 on the, what's the FHA credits right now. So you're probably getting your 650 from an app, probably Credit Karma or your credit card or something like that. That is not the same FICO model that mortgages use. Mortgages use FICO 5. That's why Lee says, I don't know if you're a 650. So give us a call. We'll pull your credit. We'll let you know where you stand. And it's easy. It doesn't affect you negatively. It will probably decrease the credit score, said user 5092. I don't know what that means.
Okay.
Jackson's back in the house. Y'all out here still hustling?
We've been
Stay
hustling.
hustling.
Shoot, I've been hustling since I didn't even finish high school. I started hustling.
Dude, they had high school
I started
back in the day?
hustling. They did, man.
Man, that's crazy.
We rode a dinosaur. I finished high school. I didn't finish high school.
Did
I
you or
started
didn't
hustling,
you? Now I'm
and I
confused.
never stopped hustling. I'm still hustling. I'll be hustling till I die, Justin.
That's a long time from now,
Yeah, I
man.
know,
You're going to
right?
live to be like 288.
I know I am.
I believe it.
With my high level of income and the modern advances in medical technology, 288 is reasonable.
I think so.
Yeah.
Cold War TV. Can I get a $7,500 cash loan paid off my happy message place? Okay. All right, cool. Cold War TV? Probably not. Jules, what is credit score unscorable on credit bureaus? What is unscorable?
Why is a credit score unscorable on credit bureaus? Okay, Jules, if you're coming up with a NA, not a 0, but an NA, not applicable, when you pull your credit, it means you don't have enough trade lines in order for the trade lines to rate your credit. So, we can do something called alternative credit. We have run into that situation, and when that happens, we just have to prove that you pay your bills on time. And we can actually approve a file with what's called alternative credit. It does happen. What is the APR? Uh-oh, we got somebody in here.
We got a loan officer.
I know, we got a loan officer in here. So, in order to find the APR, user 50923, the actual quote is on the website. That's the actual quote. This is what I told you. I'm not quoting you. I'm telling you what New American Funding is putting out on the website, and they're putting out 5.75. And I do believe there's a buy down in there. There's an asterisk in there. You have to go into the details of it.
Where can you find it? You can send them to it.
Yep.
Where can you find
You
it?
can go to the top links right over here. Go to Cool Stuff. And once you get to Cool Stuff, you can see today's interest rates. And you will go to the website that we go to every day to look at what New American Funding is putting out there. Now, in order for me to give you a quote, user 50923 in the event you're a regulator, the only way I can give you an actual quote is for me to pull your credit, calculate your income, check your assets, and then build your file, and I can actually give you your legal quote. This is not an offer to lend. My NMLS is 944-254, and Chris's is?
1066958.
Cool, next.
Miss Sally, my husband and I are ready to buy a house, but we don't know where we stand. What should we do?
That's easy, Miss Sally. That's easy. Call him right now. Boom! Well, actually, wait till after the live because he'll answer after the live. If you call him right now, it's going to go straight to his voicemail. But if you call him right after the live, what he's going to do is he's going to talk to you for probably 5 minutes, as much as 20 if you want to, but probably 5 minutes. Take in some data, send you an email. Then he's going to ask for permission to pull your credit. He's going to pull your credit right on the spot, and whatever you told him your income is, he's going to believe you until you get the documents in. So he's going to start building the file based off of the income that you gave him and the credit score that we have, and then whatever you said you have in the bank, he's going to believe you. So he's going to put that in the file, and then he's going to work up a rough file. And he's going to say, hey, listen, based on all these wonderful things that you told me on the phone call, you're approved. Now, once you get me the documents and I can actually verify every piece of this, I'm sending you shopping. That's simple.
Miss Sally, in the event we don't qualify, what would happen next?
Well then, good question, Miss Sally. What we would say is, hey, listen, you don't qualify because scenario 1, your credit's too low. All right, cool, we're going to send you to credit repair. Scenario 2, I don't make enough income. All right, well then we're going to figure out how to either put a non-occupant co-borrow in or file your taxes in a way such that your income will qualify you for the amount that you're looking for. Or problem number 3, I don't have enough assets. Oh, let's entertain a down payment assistance program. Or let's talk about moving money from that 401k over to the investment on your house. So there's a lot of ways that we can solve this.
There you go, Miss Sally. Joseph Leone, 128K salary, Austin, Texas area. Do you figure we qualify for it roughly?
Roughly, you probably, Ryan, I do a lot of, was it Ryan? Joseph. My primary residence is on Lake Travis, so Austin, Texas. And I do a lot of loans in Austin. 500,000 is where you would start, but you probably go higher than that. Now, in Austin area, you're going to find some weird things because if you go to certain parts of Austin, you're going to see high tax base, like Buda. A lot of people in this don't know what I'm talking about. But if you go to Buda right now, some of the areas in Buda are hitting at 3.6% tax base, which is going to change your buying power. But if you go into Austin proper or
Round Rock to be exact.
Round Rock is pretty good as long as you're not jumping into a new build. The tax base in Round Rock is respectable. I think the last one I did in Round Rock was 1.97, which is good for Texas. Texas, we kind of pencil in 2.6 in that range. But if you can get a lower tax base, in Round Rock, it's a little bit lower in some areas. But if you go to a new build, it gets a little weird. We're going to help you.
Ryan, what if I have 900K in the bank? Can I get a 900K house?
Yes, all day long, every day.
That
I love it. Ryan.
Is mathin'.
It's mathin', dude. It's mathin'.
Nana, can you increase if you don't get qualified with what you applied?
Yes, you can. It's just a matter of income, debts, interest rate. Your interest rate gets better when the market goes down or your FICO goes up.
Dang, you outed yourself, bro.
Dude,
Ryan
what?
said, I know he's rich. Lake Travis? Dang. Gelato, how long do I have to be working for FHA or USDA?
Okay, here's a catch. This one's a catch, and a lot of people don't know this. This is a catch.
Ooh,
it's a catch.
Is this a secret?
If you go to the guidelines, everybody's going to say, we mandatorily need 2-year work history. But the actual guideline says we recommend a 2-year work history. So loan officers take that as to heart. They're like, yes, I need a 2-year work history. But the truth of the matter is there's a lot of reasons why I can get away with 1 year. I can get away with 1 month. Wait, what? Yeah, Last time I did it, I had a nurse, went through nursing school, came out with a nursing degree, got a job in Northern California for $150,000 a year. 1 month in, buying a house. Done.
Boom.
Can do it.
At 150 G income? Would she get a mansion?
Mansion. Not in Northern California. Northern California, 150 G's.
Well, what part of
Poverty, yeah.
Northern?
Yeah. Sacramento, yeah.
Because I was thinking Fresno?
No, Fresno's, yeah, you can get a
That's
mansion.
central. That's more
Yeah.
central, huh?
Yeah.
So tell me about the FMOC, man.
FOMC.
That's what I said.
Yes. I know you said it. Federal Open Markets Committee. And they're talking, and this is a big deal. It's kind of a very big deal because it's not. It sounds just like one of them stock market things. It's if you understand it, it's way bigger. It's way bigger. Here's why. I think the whole world's a conspiracy. I really do. You know why? Because you know what the Federal Reserve is? Do you think it's the federal government? Do you?
No.
Okay, it's not. It's a private company. And you know what? The federal government does not even have the ability to audit the Federal Reserve. Wait a minute. What? Wait, what?
Do you think Federal Express is the Fed?
No. Do you think the National Football League is our nation's? No. It's all hilarious. But anyway, how do we keep going deeper and deeper and deeper in
They're
debt?
gonna get you, sir.
They're gonna get you. They're gonna get you. Uh-oh. They're gonna get you. Oh, dude, yeah, you have to put a little red dot. I'm gonna be like, if there's a red dot, please let me know because I'm not looking. Yeah, so we can't audit the Fed. We can't.
It's a lotto.
And we are, how deep are we in? $31 trillion in
Insane
debt.
amount.
Insane amount.
Insane
And we just
amount.
keep going deeper.
Do you know when we got it all, though?
When?
Okay, so from the time that the country started, till Bush Senior, I think we accumulated $7 trillion. Then from Senior till today is the rest of those trillions.
Well, kind of, yeah. But you have to understand exponential growth. So exponential growth
It's just math, man.
It is just math. It is just math. But if you look at a hockey stick, it kind of stays the same way because right now, President Biden is going to spend more than President Trump, and the Democrats are beating up on President Trump because he spent too much. Well, then the Democrats got in office and they spent more. But you know what? President Trump's going to have to spend more next year if he wins again. If he wins again, he will have to spend more than President Biden did. Why? Because it's just exponential growth. It's just the way things are. Now, here's the catch. Because it all hides behind this giant veil of the Fed, we don't know where the end is. And the Fed kind of controls everything, and I think it's a gigantic manipulation. But nonetheless, we have to play the game unless you're Elon Musk. If you're Elon Musk, you don't have to play any games. You're the richest man in the world. You could literally put yourself on a spaceship and go to a different planet tomorrow. But the rest of us, mere mortals, we have to play the game. We have to play the game. And my part of playing the game is understanding loans and understanding how to help you get a house in 2024.
So you think that Elon Musk can go to another state?
Yeah, I know he can go to another state. I don't know if he can go to another planet. I know he can hop on a spaceship today.
You think he can?
Yeah, today.
You think spaceships are real?
Yeah.
You think that they actually go into outer space?
Yes.
Interesting.
And I only think that because Elon Musk is doing it. Yeah, I think that.
So you
I
think
think
he's
that,
not a plant? You think he's separate?
I don't know, but that is something that I have thought about. He could be one of those plants. Anyway, it doesn't change anything if FOMC says that we are anticipating stable. If anybody's heard what he said, please give me a quote on there.
I want to know what's going on with the Fed meeting. Loan officers, chime in. What's going on with the Fed meeting?
Yeah, and do you freak out about it? And by the way, loan officers, if you've made it this far, congratulations. Good for you. It's a very tough business. Very tough. Very tough. And for about 3, 4, maybe 5 more months, it's still going to be a very tough business. But when the tide turns, y'all are going to make so much money, it's insane.
Dude, we got to address Ellie.
Yeah.
Ellie Nayal 12. Ellie, can a $67,000 year income get or qualify for an FHA loan?
Yes. And I would say
Ellie,
you start
all day. All day.
somewhere in the neighborhood of 280.
Ellie, there you go.
Somewhere in the neighborhood of 280. It's going to be. Yeah.
Nana said, is Ohio cheaper to buy than California? Yep.
Way cheaper. In fact, I think a lot of the Section 8 company people are out of Ohio, right?
Hey, check this out. The 4 highest populated states, what are they?
California,
Okay.
New York,
Okay.
Florida,
Okay.
Texas.
Okay. Now, which ones are Democrat? Which ones are Republican?
Florida is Republican, Texas is Republican, New York is Democrat, and California is Democrat.
Now, where are the people going from and fleeting to?
You would say they're leaving California. That's the biggest one. They're all leaving California. They're heading to Texas and Florida, I think, and Arizona,
A little
and
bit.
ironically New Mexico for some
But
reason.
it is those 4 that are just transferring. Literally, those 4
Kind
are
of,
the
yeah,
biggest
yeah,
lots
yeah,
of
yeah.
people transferring. Just
Yeah.
kind of wanted to say that.
Well,
put it out there so
I
the
know
people
this
could chew
one
on it.
real famous guy who moved from New York to Florida recently, and then New York sued him, and they won $300 million from him. What? Because they believe Mar-a-Lago's worth $18 million.
No, a judge said that.
Yeah, a judge said that. That judge said, yeah, it's crazy, man. That even Joe Rogan said, hey, listen, if you offer me that property, I'll write the check right now. $18 million today. Joe Rogan could do that. I think. I don't know. He never says it.
So, person with no name, if you buy a property right next to mine, is it possible to merge 2 properties together?
Yes, it is. Yes, it is. It's a little bit complex. A little bit complex. But what you have to do, it depends on what state you're in. I had to do it in Texas. I have 3 properties, and I had to merge them all together in the buy. So it's a little bit complex, but it can be done.
Gelato. Camacho 94 in the house. Can I still be approved for a loan if I switch jobs on very different fields?
Maybe. Camacho. Maybe. Yeah, we can pull it off sometimes. If you're in the same field, I'd say absolutely easy, slam dunk. But if it's a different field, we're going to have to make a case to an underwriter that you can pull this job off for 2 years. Because, like, let's say you were an office worker for 2 years and you worked in an office and every day you went 9 to 5. And then the next day you said, you know what? I'm done being an office worker. I got me the same salary being a truck driver. I got to go across the country. Now, we don't know if you can actually do that job because truck driver is a whole different job than office worker. And if you have to sleep in a truck stop and you have a bed in the back of your truck and you have to pull over every 8 hours and get rest, we don't know if you're physically and mentally capable of doing that. That's why the erratic shift. But if you went from office manager at, let's say Office Max, and then you're now the store manager at Ralph's, that's not that far off. It is an entirely different industry, but I might be able to make the case because I could probably go manager to manager, but you're hopping in your car and you're driving 8 hours and you're doing 8 hours at a job. So the reason that this exists is because we don't know if you can do it. I got a lot of guys who go out and be linemen. These are the guys who jump on the telephone poles and they go all the way to the top. And they climb to the top and they work on high power electricity and shit, and they make a ton of money. But like 6 months in or a year in, they're like, I can't do this anymore. I quit. And you know why? Because that's just not set for everybody. Just like truck driver, that's easiest. Truck driver is a tough job. It's not an easy job. It sounds, just drive. No, it's not. It's not the just drive. Anybody can drive. It's the drive for 8 hours, understand the DOT rules, pull over when you're supposed to, get a hotel when you have to. It's a tough job. That's a tough gig. And OTR guys make a ton of money. I mean, I've seen a lot of OTR guys make $100,000 a year. Most of them make over $100,000 a year. $250,000 a year. Yeah. OTR guys make a lot of money. I saw one Uber guy make Uber, which was strange.
Yeah.
180,000. 180. I said, wait a minute. How do you make 180 at Uber? And he goes, I was driving 16 hours a day. They don't have any limits, and I don't have a family. So I just kept. I'm like, you're shitting me. That much money? Anyway.
All right. Let's see. What do we got next? Gelato. Is it possible to inject HELOC equity into SBA loan? If you can get the HELOC, you're going to get the cash.
Not right here.
You can do whatever you want with the cash. I mean, yeah, I suppose. Okay. But it's up to you. There's no rules against that. Once you take a HELOC, it's like a credit card. You're going to access cash money. Mm-hmm. Put it wherever you want. Yeah, you can pay off your SBAs if you want. Mm-hmm. And this person said California. I don't know why you said California, but we're in California.
Yeah, we're in California. Right now we are in Riverside, California. If you want to come see us, we welcome you. Just give us a heads up. We'll be here.
Nana, can I build a home with $57,000 income, 720 score, 150 debt, 15K down?
Can I build a home?
I think you can do the one-time close.
Build a bear? Build a home? Maybe. So FHA has this one-time construct. It's one-time construct or one-time close?
One-time close.
One-time close program, and it's difficult, very difficult. Can it be done? Maybe. Maybe. I say maybe because I've seen a lot of people start these things. They've also started 203K loans, but they don't finish them because they're too difficult. Because constructing a house is a profession. It's not something that you just go, hey, I think I want 4 walls and a roof. No, you need to know the land. You need to have the soils tested. Then you have to pour the concrete. Concrete has to be the right kind of concrete to be able to bear the weight of the house. You have to know what kind of weight the house is going to be. So there's a lot. It's a profession. It's like anything. It's a profession. So if you're trying to do it by yourself, FHA says, yeah, we'll kind of help you. But you do need this special manager, the special construction person, the special thing. And by the time you get through all those special things, you're like, I don't know if I want to do this anymore. That happens. I've seen it happen.
So I have a question. So I've been doing loans since 2006.
Okay.
And this is the first year that so many people have been coming out of the woodwork with building. Why is that?
Because
What's
it's cheaper.
going on?
They think it's cheaper.
Is that why, Nana? Nana, why do you ask that question about building?
Everybody thinks it's cheaper. Everybody thinks, I mean, seriously, that we all go through this. I've been through this. I see it every day. They're like, hey, you know what? I'll just get myself a piece of land and build it cheaper. And it's not a bad thought. It's just very, very difficult to do. It's kind of like, hey, I'll just perform my own surgery. Yeah, okay. Well, on a lower level, I'll just cut my own hair. Well, some people can pull it off, but most cannot. And then the next level of that is, well, then I'll do a mobile home because it's cheaper. And we know what the guidelines is. Mobile home.
Time. What do you mean, Nana? Gives a little time to pay.
Yeah.
To start paying your mortgage payment.
And I think it's dude. Everybody's just trying to make a living. Everybody's trying to get their house. They want to buy the house. And if you have a job that only pays $60,000 a year, and you run the numbers, and you find out that $60,000 a year will only get me like $280,000, you're like, hey, I could buy a piece of land for $50,000, and I could probably build this thing for $150,000. It's cheaper to do it that way. I'm willing to put my time into it. But there is a profession involved, and it's kind of hard. And I'd like to help these people. Like I say, we've started. How many 203Ks have you started that did not finish?
Dozens.
Yeah. There's a lot of 203Ks are home improvement loans, and they're a pain.
You're asking people to do things that they're not good at. Like, for instance, you're asking the contractor to provide documentation. You're asking the contractor to fill out this document. You're asking and they don't do that. They swing hammers. So, anyway, Jose Barbosa, 85K a year, 780 credit score. How much can I afford for a house in California?
In Cali, you're probably starting for 380, 400. Depends on your back-end ratios. So 380, 400 in that range. Your FICO score is amazing. That's going to get you a lot of forgiveness, a lot of latitude. That 780 FICO, that gives you a lot of power. FICO is very important when it comes to buying a house. You don't want just minimum qualifying if you can help it. You don't want 580 or 620. Everybody's like, hey, how can I barely get into this? No, you want to be at the top end of the range so you have choice. Because I'll tell you what, if a buyer comes to me and they come to me with an 800 FICO and they're not buying outside of their means, they're a gold borrower. Every bank wants them, every bank. Which means I have to go, all right, bank, I'm eventually going to get shopped by this guy. This is what the rates are telling me. Can we go better than that? Can we go better? And I ask that because I know, I've been in the business long enough. You got an 800 FICO score. Even if you land up with me, you're going to check 1 or 2 other spots before you lock it in. And every bank wants you. So it's not hey, you better go with me because I'm the only one who can do it. No, if you got a great FICO score, you're in a good spot.
Yeah. So second part of the question, Jose said, for a starter home, would you recommend a mobile home rather than a regular home?
No, absolutely not. If you can get a stick built, even if it's just a little tiny starter, if you get that stick built, first off, you'll start out with an FHA loan, which is easier because you can get in with 3.5% down, and the rates are better. Even though there's MI on it, the rates are usually better. They're competitive at least. Then you now have the ability to live in a house and start building equity. Because when the rates go down, prices of all houses, we believe, are going to go up. I don't have a crystal ball, so I don't know. But I do believe they're going to go up. When they do, you now have equity. And this is where when somebody buys a house for the first time, they're like, hey, how did I get $300,000 in equity? Is that real money? Can I get that out? Now, if you start using like a credit card, probably bad news. But if you use yours like a starter home and you say, hey, listen, I now have $100,000 in equity, Now I want to move up. Now you've got options. Options. Would I say sell it to take the 100 grand out? Probably not. I would probably say put a renter in that, let it debt service, because it probably will, and then move up to your next home, because now you have cash flow.
Snap Kitty Cat. I'm concerned with getting a home loan. Can you give me some advice to make me feel better? Snap Kitty Cat.
Snap Kitty Cat. So I'll give you a little bit of advice. I'll give you some logic. How about not an advice, but logic? Okay. So if you're renting today, in my area, we'll call it where I'm at right now, Riverside, California. If you wanted to rent a decent 3-bedroom, 2-bath, $3,000 a month. $3,000. Okay, $3,000 a month. $3,000 a month for 12 months is $36,000. If you did that for 3 years, you paid $100,000. $100,000. Now, if you did that, you paid somebody else's mortgage. You didn't pay yours, you paid somebody else's, but you still paid $3,000. Now let's say we get you into a house and the mortgage payment is $3,000. At the end of the year, you paid $36,000. At the end of 3 years, you paid over $100,000. Either way, you paid $3,000 a month and over $100,000. But in the scenario where you own the house, you've got equity appreciation, tax deductions, very big, tax deductions. So, on deciding whether or not you should buy a house, if you're renting, and that's the key, if you're renting, if you live at home with mom and dad, this doesn't matter. But if you're renting, you're paying $3,000 a month no matter what. $3,000 a month no matter what. Logically, what do you think you should do?
Mondo said, not really. You got to pay interest and not to mention property tax.
Mondo, good question. Good bring up.
I would just invest to rent, not to buy, own.
Mondo, $3,000 a month is PITI. That's the scenario I ran. Because you're correct, Mondo. Mondo's talking about something. Because if you're thinking you're paying the entire principal down with $3,000 a month, you're not. About maybe 30% of what you pay goes to principal. Most of it goes to interest because that's how banks work. That is. But if the rental market is $3,000, you're paying $3,000. And if your mortgage payment is $3,000, you're paying $3,000. So no matter what, at $3,000, you're paying $36,000 at the end of the year and over $100,000 within 3 years.
Not to mention that $3,000 rent doesn't stay $3,000.
Oh yeah, rent. They can move up your rent, and that's where you really start to, really start to gain. Because here's what happens. Somebody, let's just say I have a friend who bought a house for $500,000, okay? And let's say he bought it 4 years ago, maybe 5 years ago. And he's like, oh my God, $3,000 a month, that's crazy. But it's a beautiful 4-bedroom, 3-bath, gigantic house, okay? And the mortgage payment is $3,000 a month. And he's like, oh, I don't know if I can make this. Okay, cool. 4 years later, that same house rents for $5,000. You know what his payment is? $3,000 a month. It will be $3,000 a month for the next 30 years, with one exception. Property taxes go up a little bit. In the state of California, you're only allowed to go up a little bit every year. So it's not dramatic. In Texas, they can slap you, man. In Texas, you better have your homestead. In Texas, by the way, if you don't know what homestead is in Texas, you got to file that homestead because that's going to limit their ability to increase property taxes. But I own properties in Texas. They go up fast, like really fast.
Ryan, more expensive nowadays to build than buy. Possibly.
Sometimes, yeah, sometimes.
Gelato, what would you recommend a DSCR loan for?
The only thing you use a DSCR loan for is an investment property that debt services from the jump. That's the only thing you use a DSCR loan, because that's what a DSCR loan is.
I'll argue that.
Okay.
I'll say a person that wants a primary residence that can't necessarily prove income that has the down payment, because you could do a primary DSCR. So I would say that.
Yeah, okay.
There's a lot. I mean, it depends on how you're looking at it.
20%.
Yeah, you got to put down payment.
Yeah.
You got to put down payment.
Shared the live. We appreciate you sharing the live.
This is a good question, but I don't know. US user 5092. Why go with FHA 3.5 down payment versus 3% conventional loan? Both you can streamline? ?
Okay, good. User 5092. Here's the catch. Okay, first off, 3% conventional only applies to a very small part of the population. And that is somebody who hasn't owned a home.
Second part of the conversation, when the customer wants to refi in the future.
They'll all want to refi in the future. But everybody's going to want to refi. If you bought today, you're going to want to refi. There's no question. You're going to want to refi. There's no question. And I'm actually going to go a little bit deeper on this. So if you have a 3%, there's only 2-3% programs, Home Ready, Home Possible, and that's Fannie Mae, Freddie Mac. But here's the catch. If you're going with the 3% down, your FICO score becomes so important, it's insane. It's very, very important. Here's why. Because let's say you go in with a 3% down, you have a 620 FICO, just barely qualifying. I could price out the MI and it could come in at 131 basis points. 131 basis points. Why? Because you're only putting 3% down and you have a low FICO score. If you have an 800 FICO score, I might get you in at 0.21, maybe 0.28, which is really good. Now, FHA has a built-in 0.55. This gets complicated, but it'll come together in a second. So the FHA has a built-in 0.55 unless you put over 5% down, in which case it goes to 0.50. But 0.5 is static. It's just going to be there. Doesn't matter what your FICO score is, it's always going to be 0.55 or 0.50. But if you're going with a 3% conventional and you have a low FICO score, your MI is going to go through the roof and your payment's going to be way more expensive because 131 basis points is way bigger than 0.55 basis points. That becomes very important. So, why would you do the 3.5% over the 3%? Well, the 3%, if you have an 800 FICO score, I'd probably go with the 3% conventional. If you don't have an 800 FICO score, if you have a 620 to 680, I would probably go with an FHA 3.5% down. Now, can I streamline both? No. No. Let me say that again, in case you didn't understand. No. Why? Because the only loan that can be streamlined is an FHA. And, hey, I want to refinance in the future. Breaking news, heard it here today. Anybody that finances in 6%, 7%, or 8%, when rates go down to 3, 4, and 5, they are going to refinance. It just makes financial sense. So everybody's going to refinance. We actually build it in to the structure of the planning. And New American Funding has built this little thing that says, hey, if you fund your loan by, I think it's April now, end of April, we'll do a refinance free for the next 5 years. Because they know. Everybody knows. Everybody in finance or that has common sense knows that if you get a mortgage today, you're going to refinance. It just makes sense.
Okay. Mondo, most people can't pay extra on the mortgage.
Okay.
Make your regular mortgage payment.
Mondo, make your mortgage.
Just like you make a regular rent payment.
Yeah.
Rachel W. What are the house prices for at least 2-bedroom in Riverside? We have a credit score of 760. 140K is either down payment or income. I'm not sure, Rachel. What is that?
Rachel, you need a great realtor. Here's why. Because houses are expensive in Riverside. And you have to decide what your lifestyle is. If you make 140K, you're probably topping, I don't know, 590, 600,000. And in Riverside, you can find a house for 590, 600,000. Or you can go to condo. Condos are different. But I'm not going to be the guy to tell you which house because I deal with the loan side. If you have a good realtor, the realtor's going to know the market, know when something's overpriced, know when something's underpriced. I have a realtor that this weekend did an open house on a house in Rialto, and the fair market value was $600,000. But she listed it at $575. I said, why on earth would you do that? She goes, because once I lift at $575, do you know how much traffic I'm going to get? I'm going to get an insane amount of traffic. And you know how many offers I'm going to get? And I'm going to talk to every single one of those agents because that's the way it works. And I'm going to tell them, we know fair market value is $600,000. We're going to entertain all offers on Monday. Give us your highest and best. The lowest won't be countered. So what the realtor has to tell their client is, hey, listen, they know it's worth $600,000. You better offer something good. Because literally that next day, she got 14 offers. 14 offers. And a couple came in at $575. She just said, thank you very much. Have a nice day. Appreciate you offering. Really do. Thank you. Have a good day. You're not going to counter? Nah, why would I counter? I got 10 others that are at market or even above market. So she gets to go to her seller and say, hey, listen, I got 5 at market, 500 or 600 grand, and I got 5 above market. Let's talk about those ones above market. And that's the way it works. So you need a good realtor who understands this process. I'm talking from the seller's end, but the buyer's end actually knows this stuff too.
All right, Donna P. Can your taxes go up too to make payments higher?
Yes,
Question mark?
yes. They always go up. That's the rule of life. Taxes go up. And if you think you actually own your home when you've paid it off, try not paying your taxes for a year or two. They'll come and take your house away from you. They have that power. Taxes go up. That's the way it works.
You're welcome, Rachel. Let's see. Mondo, that little is dramatic.
Yeah, Mondo, I am a little dramatic. That's what you get. NMLS 944254, NMLS
1066958.
Cool. And New American Funding is 6606.
Coffee 0000. That's a lie. Insurance goes up too, but okay.
Okay, insurance
all right.
does go up. It
So
also
does
goes
milk,
down. Yeah,
so
by the
does
way,
gas,
yeah,
so
insurance
does his
does.
hat.
Insurance goes down though. You can shop insurance. You can
Well-
you can shop insurance all the way through the loan. You can just say, hey, here's the minimums required. I'm going to shop you against, I don't know, Ameritrade, Esurance. I don't know what I'm talking about, but the insurance companies, you can shop insurance and get it to go down. It does go down.
Link Marky 860. What about Napa? Napa Valley?
Napa
Want to
Valley.
buy in wine country?
We
What are you
love
talking about?
Napa.
Mondo, no shame on one though. We all have different opinions.
Appreciate
Yeah,
you,
of course.
Mondo. Are you an LO? I appreciate you, Mondo. Really do.
Hello. Would it be possible to pull a DSCR land and a USDA?
Whoa.
Damn.
You just said you're mixing Coke and Pepsi, man. You can't do that.
Yes, you can.
You can't mix
It's
Coke
not
and
good.
Pepsi. You
It's
can't
not
mix
good.
Coke and Pepsi. It's
It ain't good at
impossible.
all.
So USDA loan is a geographically driven loan, and it is a federal loan. It's the 3 federal loans are FHA, VA, and USDA. USDA is designed to populate rural areas. So you don't get qualified for a USDA loan first. The house has to be qualified first. So you literally put the address in, you go to USDA.gov, put the address in, and it'll give you a green or a red. It's either qualified or it's not qualified. After it's qualified, then we basically underwrite you like we would for a regular FHA loan or VA loan, but we use something called GUS. It's called Government Underwriting System. And we use GUS and we approve you for the USDA loan. Now that's way different than a DSCR loan because USDA loan is 0 down. 0. Let me say it again. 0. But the property has to qualify, then the borrower has to qualify, then we get you in the loan. DSCR is 20% down.
All right, time for commercial.
Hey, if you need a badass loan, call a badass loan officer. You can reach a badass loan officer by dialing the number on your screen right now. Chris and Lee are your badass loan officers at New American Funding. By the way, don't call us right now because we're live and we can't answer. Bye.
Also, guys, you should know this. We have copycat accounts, so we never friend you, we never DM you, we
Yeah.
never do any of that stuff.
We're not trying to give you advice. We're not looking, we don't push really hard for your loan. We got so many people coming at us that if you say, hey, I want to wait, I don't sit there and try and talk you into it.
Yeah.
I'm like, hey, okay, cool, come when you're ready.
And we
hey,
don't
hey,
have-
yeah.
we
And
don't
I don't give a shit. I mean, we're at the spot in our career, I guess, where if you don't want to do a loan, I'm not going to help you. But if you do, I'm the best you could possibly have, or he is too.
And we're not pushing any of the financial products or investments or anything like that. So if you get those DMs, if someone's trying to friend you, it's not us. But here's our cell phone numbers. You can actually talk to us.
Yeah, and we also put it out on our videos now that we go live Monday through Friday from 11:30 a.m. to 12:30 a.m. Pacific Standard, so you can ask our questions, so we can get rid of those copycat accounts because TikTok's not helping us, Instagram's not helping us. They say, well, they're not violating any rules. I'm like, yes, they are. They're using my like list. Anyway,
Care
moving
about
on.
your likeness, man? You know why they hate us?
Why? Because they ain't us.
Oh, dang! I like that. Rachel
do it.
said income. I'm not too sure what that means.
Okay.
AKC Bulldog said 750, question mark. I think that's maybe a credit score. So good job.
User 509 says, you can streamline a conventional under the making home affordable.
If I remember correctly, that's not a real streamline. That is a modification of sorts.
Yep.
And I've never streamlined a conventional, so you may be sharing something new to us.
Yeah.
So good news if you can actually explain it and it's real. But I think that's a modification of sorts.
Yeah, and I will say that in the mortgage industry, they actually call it an FHA streamline loan. That's the name of the loan, FHA streamline loan. To my knowledge, and if you've got one, please tell me.
Yeah.
But I've never seen a conventional streamlined mortgage.
Mario makes it happen. What's the minimum credit score for commercial purchases?
Mario makes it happen. You cannot make it happen with us.
Nope.
Because we don't do commercial loans. Sorry, wish we could help you, but we can't. Well, we can't help you house hack. If you get a 4-unit and you live in one of them, that's your primary residence, and you can rent the other 3, and you kind of got a business, real estate investment, and your home.
Non said Stallion Springs, California, Coon County house still under Prop 13.
Yeah, the whole country, the whole California. The whole California is under Prop 13, and they try to take it away, but they can't. They haven't been able to. That's the shot heard around the world.
Newsom wants to, though.
Yeah, Newsom wants to. Newsom's tried all kinds of stuff.
Connor back in the house. What's up, brother?
What's up, Connor? Great to see you, man.
How to get my 750 score to 800, LOL. I want to be elite.
Connor, just keep paying
man.
those bills. Yeah, keep paying those bills on time. Make sure you keep your credit usage at 30%. And a mortgage helps. A mortgage really helps. It helps a lot to get you to the 800s.
Jay with a good question. For FHA, do lenders require cash reserves, and what do lenders look for in bank statements?
Jay. One of my favorite singers is Jesse J.
Oh, okay.
Yeah, go ahead. Yeah, you talk too much.
For FHA, lenders require cash reserves sometimes. Okay, so here's the case. If you have a 620 or better credit score, you're probably not going to need any reserves. But less than 620, definitely close to 580, because I have a dozen of these files going right now. Yes, they're going to want 1 or 2 monthly payments left in the bank account after you close your transaction, because the credit is less than perfect, I guess, or less than good. So they're going to want to see that you have a couple months to set aside in the event that something south goes on, and you're going to be financially responsible for those mortgage payments. And they want you to make them on time. So if you have less than a 620, I'm going to say 1-2 mortgage payments set aside for reserves, but that's about it. FHA is pretty lenient on that.
Count's going up pretty good too.
Paris, 3% where?
3% anywhere in the country. Conventional, home possible, home ready.
How much is NYC percentage?
NYC.
That's New York City.
Yeah. Well,
Paris is in New York City, man.
The loans
You want to do New York?
Yeah, I do want to do New York.
Yeah.
I want to do a loan in New York. We haven't done one yet. We just got approved about a month ago. So the loans are across the board. FHA is federal. Fannie Mae, Freddie Mac are GSE, government-sponsored entities. Means the federal government does have some say in their underwriting guidelines. So right now, New American Funding is putting out 5.75 on the website. If you go to the link at the top, you'll be able to see cool stuff, and then you'll see today's rates. But that is not your quote. In order for me to give you your quote, I have to pull your credit, calculate your income, figure out your assets, and then build your credit.
Dang, Pindy boys. I have debt and score is 620. I'm able to buy a house. Income is $75,000.
I'm able to buy a house. That's a statement. So, yes, congratulations. Good for you, man.
User 2240, $76,000 income, $8,000 debt. Credit score is 730. How much can I afford?
You're probably starting at about 340, 350, 360. It's going to depend on your tax base. So depending on what state you're buying in and what county. Some counties go ridiculously expensive. I did one in Buda, which is in Texas, and the tax base was 3.7. I was sitting there going, is that right? I even pulled it, checked it, called everybody. 3.7 was the real tax base. Insane.
Insane in the membrane.
Insane in the membrane.
Jaden
But yeah.
Still, can I refinance my car right now if I'm purchasing a home in August to up to my affordability?
Jada, you should talk to us. There's a reason that you would do it. There's a reason that you would not do it. I'll give you some real quick brush strokes. If there's 10 months or less left on an installment, I can ignore it anyway. So if you're planning on shopping and there's still 10 months left, we can ignore it. We can don't see it, don't care, as long as it's an installment, not a lease. If it's a lease, I have to assume you got to get another lease. So there's rules on this thing, but you would talk to us before you do it.
Sergio, keeping up on the gossip. Can the buyer agent fee be included in the loan, or will it be out of pocket? That's the gossip.
Well, Sergio, right now, nothing has changed. You see a lot of stuff going on in the news because if it bleeds, it leads.
Gossip.
And it sounds amazing, and it sounds horrible, and it sounds like NAR settled. Because if you read all the headlines, NAR settled. They did. But here's the part they're not telling you. The judge hasn't signed off on it yet. Once the judge signs off, then it's legal. But right now, it's two guys going, hey, we think this is good. But can a judge not do it? Yeah. If it does take effect, it won't actually change things till probably July or August. At that point, then we'll have to change the way things are. But as it stands right now, the agreement is that they can't have no backroom deals, because that's kind of what it was, backroom deal. Anyway,
Donna P, why is down payment so high?
Donna P, it's not that high. It's we got 0 down. That's pretty low. I mean, can you go much lower than 0? I don't think so. Yeah, Donna, because we have 0 down payments. You can do a Home Possible or Home Ready with 3%. You can do a FHA loan with 3.5%. You can do a conventional with 5%. You can do a second home with 10% or investment property 20%.
Hell,
So,
you could put 25%.
If you want 25, you can.
Jaden Steele, can I read? I already asked that question.
Yep. Dude, I write questions.
Like with USDA, said George Gamboa.
I don't know what that means. Help me, George.
He said, are there any location restrictions for FHA loans? That's a good question.
That's a pretty darn good question. Yeah, that's a pretty darn good question. So, FHA.
Find it. Where can't you do an FHA loan?
You can't do an FHA loan where FHA doesn't allow it.
Where's that? Condos. Well, non-approved condo associations.
Yeah. Non-approved condo
That's
association. It. Yeah, the property has to be FHA qualified, and that's different than Fannie Mae Freddie Mac qualified. In fact, sometimes when people have a shaky property, they'll say, we're not accepting FHA offers because they know it won't pass FHA muster. What that means is the roof's not right or the plumbing's not right, something's not up to code that FHA will catch every time, and they're hoping conventional won't catch it.
Yeah. Gelato said, thank you.
We're here for
Donna
you.
P said, I talked to someone from NAF, Rihanna from Illinois.
Good for you, Donna.
Yeah.
NAF,
Hope she does good for you.
I hope she does good for you.
We got a lot of loan officers.
There's a lot of loan officers here.
So here's how it works, guys. Let me kind of share this with you. Cool. We don't work for New American Funding. We're loan officers that choose to fund our loans through New American Funding. So that's how I see it. So we don't know everybody here. There's a lot of people.
And the way we know we don't work, we could show up 40 hours, fund 0 loans. You know what our paycheck is? 0. We actually owe them money.
Yeah.
I mean, seriously, that's happened. Yeah, if we fund 0 loans, we owe them money.
Yeah. Serge, do you know about HELOCs?
Yes, we do. We know everything about HELOCs. What do you want to know, Serge?
There you go. AKC, $750, enough for a conventional.
Oh, AKC
Bulldogs
all day, every day. Every day.
Yeah.
620, 750, you get you a good conventional loan.
Man.
Yeah.
You're going to get good. And if you're less than 20% down, you're going to get good mortgage insurance too.
Gelato says, overthrow Newsom. I agree with you, man. I will sign that petition. I will pick it as long as it's not during work hours because I got shit to do.
AKC Bulldogs, what's the difference between FHA and conventional?
FHA is a government loan. FHA is Federal Housing Administration. And it is strictly by the government. The government runs that one. Conventional is Fannie Mae and Freddie Mac. Those are government-sponsored entities. They used to be private entities until the crash happened and they had to get bailed out by the government. And the government said, hey, we'll bail you out under this condition. From now on, we have some say in the underwriting guidelines. And they do. They're GSEs, government-sponsored entities. Now, the underwriting for GSE is a little bit looser than FHA. Some areas stricter, some areas looser. But they're different. They're just different. And to be honest, if you have, like, let's say you have a 700 FICO score and you say, what's better? A conventional interest rate or an FHA interest rate? If I price them right now, they're probably, even after you put the 0.55 MI in there, they're probably dead heat. They're probably dead on. So there's other considerations on why you would go either one.
Balin Garcia, what's your minimum down payment for I-team?
20%.
Balin looking like a real estate agent.
20%. Real estate agent, 20%.
We do have a 15, but it takes better credit.
Yeah, you have to be pretty good. I-10s, banks don't really want I-10s. It's just kind of the way it is. But they'll do them. They'll do I-10s, but they just don't really want them.
Krill, if you work with people who have bad credit, do you give them advice to do credit repair first?
Yes, absolutely. In fact, we'll even tell you how to do it. It's not brain surgery. It's I'll give you a quick hack. We're getting to the end, but a quick hack is credit has no memory. So if you went to mommy and daddy who have an 800 FICO score, mommy and daddy, hey, mom, dad, remember you love me very much? Yeah. Okay, cool. Hey, can you put me on your credit card that you've been paying for the last 80 years? Mom and dad are pretty old. That's 80 years on time and you have an 800 FICO score? They're like, what are you going to buy with it? I'm not going to buy anything. You can actually, when the credit card comes in the mail, you can keep it, shred it, do whatever you want with it. I just need to rate my FICO score. And once I do that as an owner or an authorized user, my credit score will go up 60, 80 points like that.
Okay, now we're gonna rapid.
Okay, we're going to do rapid fire because we're coming to the end of this.
Okay.
We appreciate you guys, by the way. Ask your questions because we're going to knock them out real quick.
And screenshot this right now because it's gonna disappear right about now.
Okay, cool.
Okay. Do sellers pay closing costs?
It's semantics. Sometimes, yes, there's seller paid closing costs, buyer paid closing costs, but ultimately the buyer writes a check for $500,000. The seller gets whatever's left after that $500,000. So it's a little semantics.
DA Brew, how long can you get a HELOC after Chapter 13?
You can actually get it while you're in Chapter 13. You can get it while you're in Chapter 13.
Fabiola, currently in escrow.
Congratulations, Fabiola.
The Flip Doctor, you guys are great.
Thank you very much, Flip Doctor. We're here for you.
If my score is 655 and my husband's 737, what score will you use?
If your husband if it's your actual legal husband, we can do something called blended credit. It's new. It's like last 6 months. You can blend the husband and wife's credit and come up with a new credit score. New. Didn't used to be that way. It used to be the lower of the two.
Angulo, I'm going to change your question to make it more accurate. For
Okay.
HELOCs possible on investment properties?
Yes.
All right. Guess what? I'm Chris. That's
I'm
Lee.
Lee. We appreciate you. We're out.